let me go ahead and start recording this. We're going to continue on with chapter 3 today. I guess I'll start out to see if anybody has any questions. You know, we started, you may have started some of the homework problems. I know I've gotten a couple of questions from different students about the chapter 3 homework, so maybe you've started doing that. Any questions before we get into it? Oh, well, all right then. Okay, so we had, and I'm going to actually back up just a little bit here so that we can refresh our memory on what we were talking about when we were calculating our FICA tax. Remember, we've got that wage base that we have to work with, and we've got a tax rate. So whenever we multiply the base of the tax by the wage rate, that gets us to our tax liability. There is a maximum wage base for Social Security taxes. There is no maximum wage base for Medicare taxes, however. So we ended up talking about this, looking at this example here, where we had an individual who did earn over that Social Security wage base. Remember, the wage base changes every year. For 2022, it was $147,000. Remember, in 2023, it's just over $160,000 now. But we don't care about that number. For our purposes, we're going to be working in our problems and everything. $147,000 is going to be the wage base that we are working with. So recall, in order to determine, and in these examples, what they did was they gave you the wage for a particular pay period during the year, because at some point during the year, anybody who gets close to that maximum wage base is going to reach that amount. And after that point, then no further Social Security tax is going to be applied. But we don't know always, exactly when that's going to happen. And oftentimes when it does happen, as in this example, actually it was the previous example where some of the wage during the pay period is going to be subject to Social Security tax, but some of the wage during that pay period is not going to be subject to Social Security tax. So we've got that point at which during some pay period during the year, they reach that wage base limit. And so those were the examples that we were working with here. Remember, and I've gone back 2 examples, so if you're confused as to where I am here. So here we've got Tamara. She earns $150,000 a year, so obviously that is above that $147,000, but she doesn't reach that wage limit until the very last pay period of the year, and it's only part of her pay during that last period that is subject to Social Security tax, and part of it then is not subject to Social Security tax. And remember, we've got our steps here. So we're going to find our prior period year-to-date payroll, how much has been paid up to now. Well, first off, we've got to figure out how much they get paid per pay period. Then we're going to find the prior period year-to-date payroll amount. So however many pay periods there have been up to that point, then we're going to multiply that by the regular pay for that pay period to determine how much they've been paid year to date up to that point. We're going to multiply that then by the number of pay period. We're going to multiply. They've already gone through all these steps here. I'm already on this second step that I'm explaining. So we're going to take that pay period wage amount times the number of pay periods that have already occurred to get the gross to date. And then we're going to take that wage base of 147, subtract it from what's already been paid to determine how much is remaining that is subject to Social Security tax. And then that's the amount during that pay period that is going to be subject to Social Security tax. And remember, I gave you the steps So there are some steps that are listed in under course content for how to figure that. And hopefully that will be helpful when you're going through your homework problems using those steps. Then this other example that we had was an individual who had already reached that Social Security wage base in prior periods, right? Because their yearly salary is $225,000, but they became then subject to that additional Medicare tax. Remember, we've got that additional 0.9% Medicare tax on wages above $200,000. So we've got a couple of different limits that we're dealing with. That Social Security, which wages are subject to Social Security up to $147,000, and then we've got regular Medicare tax, which all wages are subject to Medicare tax, and then we've got that additional Medicare tax, which doesn't kick in until wages reach $200,000. So a couple of different limits there, and then one tax that doesn't have any limits, goes from 0 to infinity. So just to kind of, and this particular example, SAMBIT, we determined that in this November 30th payroll, that, what was it here, $6,250 was over and above that 200,000. So that's the amount that was subject to the additional Medicare tax. And remember, that's only applied to the employee. The employer does not pay any of that 0.9% additional Medicare tax. Only the employee pays that. Whereas with Social Security tax, the employer both have a share of that. And with the regular Medicare tax, the employer and employee both have a share of that as well. Okay, so just kind of to get you up to date with where we left off on Tuesday. So now we have a different scenario. We've got individuals, well, actually, we're going to talk about that self-employment tax first. So remember, I said, and I'm going to write this up here on the board. I'll pull the board up here in a sec. But we've got so we've got the employee portion, and we've got the employer portion, and then we've got the total tax. And this is total tax is also what's paid by self-employed individuals. So we've got the Social Security, 6.2% for the employee, 6.2% for the employer, total amount 12.4%. Remember, we've got our wage base though of 147 up to 147, and then we've got the Medicare tax, which is 1.45% plus 1.45% for a total of 2.9%, but there's no limit. Hopefully you can see. Let me change this for a second. There we go. Now you can see it. And then we've got that additional Medicare, which the employee, and I know I changed these up on Tuesday. I had the employer first and the employee second. So that's why you'll see a difference here. This is 0.9% plus 0. Employer doesn't pay any. So 0.9%, but this is for amounts over 200,000. Okay, so just a reminder of that. So self-employed individuals, remember we talked about how self-employed individuals are both the employee and the employer. And so they are paying the total amounts, the total rates. So their amounts, 12.4, 2.9, if they make over 200,000, they're also subject to that additional Medicare tax. Of course, when they're an employee, they're the only ones paying it. When you're self-employed, you're the only one paying it as well. These amounts, when you're self-employed, though, you don't have withholding, right? For as an employee, the employee is going to have these amounts withheld from their paycheck, and that's where the payroll department comes in and calculating how much has to be withheld. For self-employed individuals, however, they don't have withholding. They don't get a paycheck. They can take distributions from their business, and that's how they can pay themselves, but they don't have like a paycheck where they have withholding. They make these payments differently. They make them on a quarterly basis, and they have to do it themselves, so that they don't have an employer that's going to do that for them. They're the employer, so they have to do it. It's not done with every paycheck because there is no paycheck. It is done on a quarterly basis where they will remit these amounts. And what they would do, this is going to be based on their net income from self-employment. So whatever their, not their gross profit, but their net profit, net income from their business. So if they get to subtract any expenses that they have from their income. So the only time really as a payroll professional that you would deal with this is when you're issuing 1099 forms at the end of the year to contractors. So, but it's up to the contractor themselves to pay these amounts, to make sure that those amounts are then remitted to the IRS. It is not the responsibility of the payroll department to do any of that. So when those contractors receive those payments for services, they're not going to have anything withheld. They're not going to have any income taxes withheld. They're not going to have any Medicare or Social Security taxes withheld. Only employees have those amounts withheld. But just kind of a little reminder, I'll keep this up here because I'll probably refer to it here in a minute as well when we go through another example, because you can have individuals who are employees and then they also have some sort of side hustle, right? That's pretty common these days for individuals to have not only a day job, but they've got some other type of independent contractor work or their own business on the side where they have to deal then. They're having to calculate this, but they've already had amounts withheld from their paycheck. And remember, these amounts, these limits are per individual per year, not per job, right? So the individual themselves has to keep track of, okay, if they've got a day job, just pretend for a minute somebody's got a day job where they make $150,000 a year. Well, if they make $150,000 a year, they've already reached this $147,000 Social Security wage limit, right? So any amount of additional taxes or payroll taxes, FICA taxes that are being paid, it's only going to be the Medicare part, or it could also be the additional Medicare part if they made in total over $200,000. Okay, so there are two parts then when you've got somebody who is an employee and who is also self-employed, then we've got that individual has two parts to worry about. But for the payroll department, we're only concerned about the amount that is related to employment. We don't concern ourselves with the amount that is earned in self-employment by that employee, right? That's the employee's responsibility. They've got to do that calculation. All we have to do is worry about the employment part. Okay, but we have to be cognizant. We have to know that there is this how to do these calculations. So let me get back over to my screen. Doesn't want to do it. There we go. Okay, so SECA, and again, SECA stands for Self-Employment Contributions Act. It has to do with that self-employment tax. And if you take income tax with me, we go over this in much more detail because, like I said, it's the employees or the contractor's responsibility. They do these calculations on their own tax form. So we go into a lot more detail on this SECA tax and what happens for individuals who are self-employed than we do in this class. We just kind of touch on it just a little bit in this class. So now that self-employment tax as well is only applied if the net earnings, and again, net earnings, not gross earnings. So if you earn $10,000 of gross earnings, but you have $9,700 of expenses, business expenses, your net earnings are $300. So if the net earnings don't exceed $400, then you don't have to worry about the self-employment tax. You kind of get a freebie there. But once they exceed, and this is total self-employment earnings, not per business, because it's entirely possible to have multiple businesses where you're self-employed. You could have lots of different side hustles going on. If in total it exceeds $400, that's when those self-employment taxes start to kick in. And that's what that's saying here, it's on combined net income. So SECA tax 15.3%, which is the 12.4% plus 2.9% for Medicare tax, again, both halves, plus the 0.9% of additional Medicare tax if the income exceeds $200,000. Again, you can have wages from a job and from self-employment income. Both of those count toward calculating that 147. Both of those count toward the 200,000 as well. So we're going to look at an example of how that works here. We've got Celia. So wages from her job are $150,000. Self-employment income for her is $15,000. So how much is her FICA on the $15,000? All right, let's take a look at how this works. So she's got wages of $150,000. She's already over that $147,000 cap, which means none of that self-employment income is going to be taxable for Social Security purposes, right? So even though she has self-employment income of $15,000, that 12.4%, and that's a big savings, right? 12.4% is a pretty hefty chunk of tax that has to be paid. So she is seeing a huge savings on tax for that self-employment income. She still is subject to Medicare tax. And if her total income exceeds 200,000, then she's going to, the amount over 200,000, she's going to have to pay that additional Medicare tax. So in this case, she does not have to pay any OASDI or Social Security. Remember, OASDI and Social Security, same thing. Only the 2.9% Medicare tax is what is applied to that additional $15,000. So for her self-employed earnings, all she's paying is $435 on that $15,000. Now remember, she's also got income tax she's going to have to pay on it. So that's not the only tax that income is going to be subject to, but for Social Security, Medicare tax purposes, that's the only tax that she's going to have to pay on that additional $15,000. And of course, this is that $15,000 is her net earnings from self-employment. She could have made $100,000 and had $85,000 of expenses, of business expenses that offset that $100,000. She's only going to be taxed on the net earnings from self-employment. Let's see here. All right, this one's a little bit more complex. And I'm trying to think if there's a way I could put both of these up here so we could see both the problem and the board. Here, hold on just a second. I'm going to do this. Hold on just a second. I'm going to get this up so I can do this problem and you can see the problem on the board. It's going to take me a minute. right. Oh, technology. How wonderful you are when you work. When you don't work, not so much. Okay. I'm just going to do this on a piece of paper. All right. So here we've got Preben. So his wages from his job, I'm just going to kind of take some notes here. So wages are $68,250. So this is from employment. Here. I know it's kind of hard to see me writing that down. I'll make this bigger in just a second. Self-employment income. Self-employment, he's got $94,500. Again, this is from self-employment. So the question is, how much is his FICA? Oh, okay, good. I'm glad, Danielle. Good. On this amount. So we want to know what the FICA is on this amount here. All right. So let's take a look at this. I'm trying to see if I can do this. How can I share this screen? There we go. That's not too bad. Okay. All right. So again, the limit is $147,000, and it's on the total amount of income. So if we want to see how much, so in total, he made $750 to $162,750, right? So this is obviously, this is over and above the $147,000. So we know that not all of this self-employment income is going to be subject to Social Security tax, right? So we just have to figure out how much. So the first thing we're going to do here is figure out, well, how much of this $94,500 is subject to Social Security tax. And there are a couple of different ways that you can go about figuring this out. We'll use the textbook's way here of taking the wage base, 147. So remember, this is our Social Security wage base, kind of our maximum wage base, right? Because our wage base for Social Security could be a number different than that, but it's not going to be more than that amount. Minus the $68,250. So these are our W-2 wages here. And they've done the math for us, is $78,750. So this is our Social Security taxable SE income. There, the $78,750. So $78,750, we multiply it by, remember, our tax rate for self-employment is, for Social Security purposes, we're just going to do Social Security at this point. Okay, so for Social Security, and this is our SECA, our tax rate is 12.4%. Again, they've done the math for us here. So $9,765 is his Social Security tax related to his self-employment income. Now, he's paid more than that over the course of the year in self-employment income, right? He has paid, because he had these wages as well. Now, he didn't pay at the 12.4% tax rate. He just paid at the 6.2% tax rate because his employer shared the other half with him, right? So so his Social Security tax is $97.65. Medicare tax, he's going to have to pay on the entire $94,500, right? So $94,500 times that 2.9%, and this is, again, this is our SECA Medicare tax here. So he's paying, and they've done the math for us here as well, $27.40.50, and this is his Medicare tax or self-employment income. So his total, we would just add these together. 1, 2, 1 plus 2 equals $12,505.50. This is his total. Sorry. SE tax. Or the two. Now we could figure out, and we could go a step further and figure out what's the total amount of Medicare and Social Security tax that he paid during the year. Because remember, he also paid, see this here? He also paid Social Security and Medicare tax on that $68,250. So just for the fun of it, even though the slide doesn't ask us to do this, but just for the fun of it, let's figure out how much he made in total. So this is for his self-employment tax. Let's look for the wages. So he made $68,250. So for Social Security or OASDI, we'll try and use both of those so it kind of reminds you that there's that acronym too. We would take the 68,250 times 6.2%, which gets us so 68,250 times 0.062, 4231.50, and then for Medicare or HI, as your book likes to call it, 68,250 times 1.45%. So this is, remember, this is FICA. This was SECA up here. So I'll get this over here so you can actually see what I'm doing. 68,250 times 0.0145. 989.63 total, plus 4231.5, 5221.13 for FICA tax. So his FICA total, his SECA total was this $12,505.50. So the total of FICA and SECA is the sum of those two. So plus 12,505.50. So $17,726.63. So in total, so he had $162,750 of income between his wages and his self-employment income. He paid $17,726.63 of Social Security and Medicare tax on that income before any income tax has been applied. Now he's going to have to pay income tax on that as well. And we're going to, as far as his wages go, in the next chapter, chapter 4, we're going to talk about how we figure out how much should be withheld from his wages for income tax, We do not learn in this class the income tax on that $94,500. Again, that you would learn in the income tax accounting class, the tax calculation on that amount. But for our purposes working in payroll, we're going to need to know how much we withhold on that $68,250. But just to, so that's, that's not a small chunk of change. Now, obviously, he's making pretty good money, $162,000. That's great. But the tax is quite substantial before we even, get to income tax at all. So that's the total. So here is an example then of somebody who has both wages and self-employment income on that. Questions about that? I'm trying to get this. Nope. Let's go to the next slide here. Do you want me to do any other examples, or do you have any like homework problems you want to work through? Could you guys all figure that out?
Yeah.
Are you?
Thank you.
Okay. Okay. All
like
right.
overall, I'm kind of processing it, but yeah, I think I'm yeah.
So what was, yeah, what that was, yes, you're good, or yes, you want to go through something else?
Yeah. I mean, I'm okay. Thank you.
You're okay. Okay, cool. All right. Okay, good. So you'll have homework problems where you can practice that stuff, of course. Okay, so let's move on then. So those are our calculations, essentially. We went through how do we calculate the employer and employee portions of Social Security and Medicare tax. We went through SECA tax, so self-employment tax, and then the combination of the two when you've got an individual who has both self-employment income and wages. All right, so now we're going to get into the reporting side of it. Oops. There we go. So just need to mention real quick, the SS4 and the SS5 forms. SS4, if somebody does not have a Social Security number, and it's possible that somebody, maybe they've got an ITIN, and which is what's the individual taxpayer ID number. It's not a Social Security number, but it's a separate number that's issued by the federal government, but they need a Social Security number. They can apply for a Social Security number using this form, SS4 form. Now that's only, of course, if they're eligible to have a Social Security number. They can also, I'm sorry, SS5 is the one for individuals. SS4 is the form that businesses fill out in order to apply for an employer ID number. Sorry. Those acronyms and those numbers sometimes get mixed up in my head as well. So the SS4 form is for employers. Employers would use that if they are starting a new business, if they're just for the first time hiring employees and they haven't used an EIN, haven't had an EIN before. And what does EIN stand for? That is employer identification number. So right here, employer identification numbers are necessary for businesses that you have to have one if you are employing other individuals. So if you're going to be an employer, you have to have an employer identification number. Or if you are incorporating your business somehow, or you've got a partnership. So anytime that you are going to have a separate income tax return, you're going to need an employer identification number. So essentially, the only time that a business does not need an EIN is when it is a sole proprietorship, meaning it's owned only by one person, and when that sole proprietorship does not have any employees. We're not including the owner in that. The owner is separate. Owner is not an employee. It's never an employee of a sole proprietorship. But if they have other employees. So like I said, the only time that a company, a business, does not need a separate EIN is if they're a sole proprietorship and they have no employees. Otherwise, every other business out there has to have an EIN. So an employer identification number acts like a social security number for the business. It identifies the business on all tax returns, on all correspondence with the IRS and with Social Security Administration, and with some other entities as well. Oftentimes that EIN is also the number that is used with the state to identify that company with the state. So essentially an EIN is a social security number for businesses, but they call it an EIN, an employer identification number. Anytime a business wants to open a bank account, usually they need an EIN to go along with that. EINs are really easy to apply for. They use this SS4 form, and it's something that can be done online. You get it immediately. You're issued the number immediately. All you would have to do is go to the IRS website and type into the search SS4 or employer identification number, and up will pop your, in fact, let's take a look at that right now. I'll show you. Oops. Let's go over here. I'll show you what that is. Oops. Okay, so here's the IRS website. It looks a little kind of, that's weird. In fact, you can do it right here. Apply for an employer ID number, EIN. You would just click on that, and you can apply online. Here's some instructions for it as well. Taking a while. Probably because my children are home and they are on their Xboxes and taking up bandwidth. So you can just begin the application here. And like I said, all you do is it takes you through a series of questions about your business. And then it asks you questions about what type of business is this. Sole proprietor will say, sole proprietor. I'm not a household employer. That would be if I'm, I've got a nanny or a housekeeper or somebody like that that qualifies as my employee. Gives you some information about what exactly sole proprietorship is. So if you're not quite sure what it is, and I know this is small, it's probably hard to see. Maybe not. But it goes through all of these questions for you. What did you do? Did you start a new business? Did you hire employees for the first time? Is it for banking purposes? So you want a bank account and your bank says you need an EIN. You changed your type of organization. So maybe you're not a sole proprietor anymore. You're changing to a partnership or something like that. In that case, when you change your organization type, you have to get a new EIN. Or if you purchased a different business, you purchased somebody else's business. We'll say here that we hired employees for the first time. So it just asks information about you, your social security number, who you are, and then it goes through, get your address, details about your business, and then it will spit out an EIN for you right there and then. It doesn't take any time at all to, whoops, did I exit? Oh, there we go. To obtain that EIN. But like I said, it's used then on all of the tax forms that are filed. So the reason we talk about it in this chapter is when we get to talking about that 941 form, the form that is filed quarterly to report Social Security and Medicare taxes that have been withheld. It reports other income taxes withheld as well. That 941 form requires an EIN on it. a business cannot use a social security number on that 941, because the 941 is only used when you have employees. And like I said, if you have employees, you have to obtain, sorry, that was my child. You have to obtain an EIN. SS5 form, if an individual, an employee needs a social security card, like they have a social security number, but they need a copy of their social security card, they can file this form SS5. There's also a verification service that employers can use in order to verify individuals' social security numbers. Social security numbers are a pretty hot commodity. They get stolen all the time. And this is a way for employers to actually verify that the social security number that has been provided to them by an employee is actually their social security number. Okay, so I've already kind of gone, through why we need that EIN. Let's talk a little bit about this Form 941. We are going to go into some details about it, and we'll do some exercises in filling out the 941 as well. We'll probably do that on Tuesday. You've got in your homework, you've got 941 forms that you've got to fill out as well. And this is something that you're going to become more familiar with this, because in chapter 4, we're also going to be using that 941 form. Like I said, the 941 is used to report both Social Security and Medicare tax withholding and income tax withholding. So because we're talking about Social Security, Medicare tax, chapter 3, chapter 4, we're talking about income tax, we're still going to continue on working with that 941. So just kind of wanted to get you prepared for that. So the 941 is it's filed on a quarterly basis. So every quarter, a business that has employees has to file this Form 941 for the previous quarter. The due dates for the 941, and you're going to want to pay attention to this because these due dates are they're relevant to both your homework and assessment and test and midterm tests. So pay attention to this stuff. So January 31st, April 30th, July 31st, and October 31st. So let me pull this up again. All right. So we've got 4 due dates. Whoops. This is kind of weird because it's like inverted. So we've got, and our year is divided into 4 quarters, right? So we've got quarter 1, QTR1, which is January through March, first 3 months of the year. Right now we're in the first quarter, right? Because we're in February. Quarter 2, April through June. Quarter 3, July through September. And quarter 4, October through December. So we've got those 4 quarters during the year. Each of these, so for the 941, there are 4 941s that are due every year when a business has employees or is required to file these. Well, when they pay employees, even if they don't pay employees, if they've filed them in the past, usually they still have to file a 941, even if they have no withholding to report. So each of these have due dates. And so this is wages paid during these months. So if we have wages, so right now we're in February, we're in the first quarter. So all of the wages paid in this quarter are going to have to be reported on the first quarter 941, and the due date for that 941 is April 30th. This is the last day of the month following the quarter end. So March, next month is April, end of that month. Quarter two, can you guess what the due date is for quarter two? So if it's the end of the month following the quarter end, what's the next month? What's the month following the quarter end, the second quarter? What comes after June? July, right? July. So it will be July 31st. Thank you. Third quarter, what do you think that due date's going to be?
October.
At the end of October.
Yeah. Right, October 31st. What about the fourth quarter? Sorry, no, this is
December 31st.
At the end of January?
The end of January, exactly. So it's the month, the end of the following month. So even though we're going into the next year, it's not due until January 31st. So they give you a month to prepare it. They give you a month to work on that 941, but it is due by the end of these dates. Now, this is only for the reporting. Remember, I told you on Tuesday, we've got different deadlines for the reporting and for the deposits. So this is the tax form and the deadlines for reporting the tax form. These are always quarterly. There's not an annual form. There's not an annual 941 that is filed. The 941s are always filed on a quarterly basis. So once you filed the 941 for January 31st, which would have been for the previous year, then you're going to start reporting for the next year, right? So like I said, right now we're in February. So the 941 for wages paid right now is going to be due April 30th. We just passed the January 31st deadline, which means payroll departments were very busy preparing their fourth quarter 941 form to make sure that it met the January 31st deadline. They've got a lot of deadlines January 31st. They've also got to get 1099s out. They've got to get W-2 forms out. January is probably the busiest month for payroll departments, right? For tax return preparation, the busiest months are going to be February, March, and April. But for payroll, this is going to be the busiest month. But then all of these months are also going to be busy because they're going to have to prepare those reports for the previous quarter. There are other reports as well that usually have these same deadlines. A lot of the state reports, like the unemployment tax reports for the state, have these deadlines, as well as like the income tax withholding for states. So they're not only, payroll departments aren't only preparing the 941 forms, they're preparing state unemployment tax forms, they're preparing state income tax withholding forms, all sorts of things that are due on that quarterly basis. So again, this is not for the payment. The payment's got a separate schedule, and we're going to go through that. But this pertains to the schedule for filing that 941. Okay. If any of those days falls on a weekend or a holiday, then the return is going to be due on the next business day. So let's take a look here at our calendar. So we had January 31st wasn't, it would have been due on the Tuesday, the 31st. Okay, so here's one, April 30th. We said April 30th is a due date. April 30th falls on a Sunday. So that means that it's actually, this year, it's actually going to be due on Monday, May 1st. So they give you an extra day to do that. If, let's see, so July 31st is good. Oops. So October, sorry, that's also a Tuesday. That's a Wednesday. So it looks like, at least for the foreseeable future, it's just that April 30th that's actually going to be due on Monday, May 1st. But anytime, and that's true across the board with the IRS, with any due date for pertaining to the IRS, the due date, if it falls on a weekend or a holiday, then it's the next business day that it's actually due. Like, for example, April 15th. So pretty much everybody knows April 15th is the day that individual income taxes are due, on April 15th. Well, April 15th this year is on a Saturday, which means that those income taxes won't be due until Monday the 17th. However, in Washington, D.C., where the IRS is located, April 17th is a holiday. It's called Emancipation Day, and it is the IRS is closed on that day. So tax returns, individual tax returns, aren't actually going to be due until the 18th of April this year. That happens every once in a while, where it's pushed off a few days. So if it had fallen on Friday, then it would be due on the 15th. But because it falls on a weekend and then there's a holiday following that weekend, they're not due until the 18th. So like I said, that is true of all deadlines for IRS forms. Okay. Any questions about the due dates for the 941s? Pretty clear. Yeah. Okay. Okay, so there is, so if an employer owes $1,000 or less for the entire year in employment taxes, and employment taxes would include Social Security taxes, both the employer and employee portion, so Medicare taxes, both the employer and the employee portion, and federal income taxes that have been withheld. So $1,000 is actually a very small number when we think about that. But if they owe $1,000 or less, then they can actually file what's called a Form 944, and that one is an annual form. The 941 is a quarterly form, but there is this annual form, so they do give a bit of a break, a reporting break, to those very, very small businesses, or businesses that really have a small amount of payroll. Okay. I'm not sure what's going on upstairs in my house. So there are other forms too. Form 945. This is for any federal income tax that's been withheld for non-payroll items. So we're not talking about wages or employers here. Now we're talking about income tax, and it's only income tax withholding for pensions, IRAs. So these are retirement types of accounts, and other types of accounts. So again, the payroll department probably isn't preparing those. The accounting department very well may be preparing those, but the payroll department isn't preparing those Form 945s. And then there are some other reporting as well. But for our purposes, we are concerned about that Form 941. We want to know when we have to file that and what information we have to include on that Form 941. Okay, so that's the reporting. Those are the deadlines for reporting. Now we're going to talk about the deadlines for depositing the amount. So we've done the calculations on how much we need to withhold for Social Security and Medicare taxes. The employer has collected the amounts from the employee, and then the employer also has their amounts that they're going to have to pay. When do they have to give that to the IRS? Right? It's not their money. Doesn't belong to the employee. Doesn't belong to the employer. It has to be sent off to the IRS, right? And credited then to the employee's Social Security and Medicare accounts to make sure they've paid what they need to. So now we have to talk about the deposit schedule, which is separate from the reporting schedule. So when we make deposits, we're going to combine all of the Social Security taxes collected, all of the Medicare taxes collected and all of the income taxes from employees that have been collected. So all of the amounts that have been withheld, as well as the amounts that are the employer's responsibility, we're going to deposit it all together, all at once. So as I had mentioned on Tuesday, the IRS, the more you owe them, the faster they want their money, right? Just like the rest of us. So the schedule, the deposit schedule, is dependent upon how much is owed. So this means that there are separate deposit schedules. There are different deposit schedules based upon how much is owed, and based upon how much has been owed in the past as well. So the IRS, every employer starts out as a monthly schedule depositor. So we've got these different deposit schedules: quarterly, monthly, what's called semi-weekly, which is kind of a misnomer, and you'll see why when we talk about it, and next day. So we've got these 4 deposit schedules. Pull this up. Here we go. Okay, so we've got these different deposits. So this, again, this is deposits that are related to the 941. This is just the reporting up here. Okay, so quarterly, it's going to have the same schedule as the filing schedule. Okay, so that schedule is going to be, if January through March, this is the one time when you can send the payment in with the 941. Okay, so it's the same as report due dates. 941, report due dates. Monthly is going to be due the middle of the month following month end. Okay, so this means, for example, April, any pay that is, any amounts of wages that are paid in April is going to be due May 15th. Okay, oops. So June is going to be due July 15th. And these, again, these are the deposits, the amount that needs to be deposited. Every business starts as a monthly depositor. So everybody starts as a monthly depositor. Now the next, and I'm going to go through, you know, how do they know which schedule that you're on? We'll go through all of that too. I just want to kind of summarize all these schedules first. The next one, which is the one that trips up a lot of students, is called semi-weekly. And it does not mean that the deposit is made twice a week. It means that the IRS receives deposits 2 times a week. So, and I always have to remind myself of this. I can never remember this off the top of my head. So, semi-weekly. So, and it depends on when the payday is. So, if the payday is Wednesday, Thursday, Wednesday, Thursday, or Friday, then the payment is due the following Wednesday. Okay, so it all depends on when the payday is. Okay, so when, and that's when essentially the liability is established. So if payday is on Wednesday, then the business doesn't have to make the payment of those taxes that have been withheld until the following Wednesday. If payday is on a Saturday, Sunday, Monday, or Tuesday, then payment has to be made by Friday. Okay. So, like I said, it does not mean that the employer has to make 2 payments a week. It means that the IRS is receiving payments on 2 different days during the week. They're receiving payments on Wednesdays from some businesses and payments on Fridays from other businesses. So just depending upon when that pay period happens. So what is today? Today's Thursday. So if there's a payday, if an employer is on a semi-weekly pay cycle, semi-weekly deposit cycle, and today is payday, that means that they will have to make the deposit of all of the income taxes, Social Security taxes, and Medicare taxes that have both been withheld and the amount that the employer owes, the employer's share. They'll have to make that deposit by next Wednesday. If payday is tomorrow, Friday, then they're still going to have to make that payment by next Wednesday. If payday isn't until next Monday, then they can wait until the following Friday to make that payment. Okay. So like I said, it all depends on when the payday is. What their deposit day is. The fourth one is next day. This particular deposit schedule is exactly what it sounds like. You got to make the deposit by the next business day, by the end of the next business day. Now, this next day requirement is, how do I want to put this? Businesses aren't necessarily always on a next day requirement. It could be a business that is on a semi-weekly deposit schedule, but if on one particular payday their payroll tax liability exceeds $100,000, this doesn't mean that the payroll is over $100,000. It means that the amount of income taxes, Social Security taxes, and Medicare taxes that are going to have to be paid exceeds $100,000. Anytime that happens, there is a next day reporting requirement. So if the business owes the IRS $100,000 or more from withholding, and this is withholding of income tax, federal income tax, Social Security tax, and Medicare tax. This would include additional Medicare tax, and it would include both the employee and employee's portion of those taxes. If the amount that has been withheld is more than $100,000, yeah, Amazon is a good example. Amazon would always have a next day deposit schedule. They've got so many. Walmart would always have a next day deposit schedule. These big companies, DMAC, would always have a next day deposit schedule. Even though they may officially be on a semi-weekly schedule, because every single payday they incur over $100,000 of these taxes. Now they're on a next day business schedule. Okay, so you could be your schedule could be quarterly. Usually your quarterly payment schedule, but you have one particular pay. Maybe you had a great year and you paid out all sorts of bonuses in that last pay of the year, and because of those bonuses, now you've got this $100,000 liability in that particular pay period. You're going to have to deposit it the next day. And then when you go back and you aren't over $100,000 of liability, then you go back to your regular cycle. So this next day, like I said, the next day for businesses that do not regularly incur over $100,000, that next day requirement may just be for specific pay periods here and there when large amounts are being paid to employees. So it's not, the next day is not a regular schedule unless the business always has more than $100,000 of liability, always has more than $100,000 of taxes that have been withheld. So when do we have to, when are we on these other cycles? All right, so quarterly, let's see, do they have it down here? Let's see. I think it's 50,000. I think it's between 2,500 and 50,000. Sometimes it changes. You can see on the form 941. In fact, let me pull up a 941 here for you. Whoops, that's not what I want. Yeah, go ahead.
So how would the semi-weekly deposits work if you had semi-monthly payments?
So okay. So you're talking about if your pay cycle, so you're on a 26 pays a year, like a biweekly pay cycle, right?
Well,
Is that what you're talking about?
I meant like the semi-monthly, like where
Oh,
you
so
get.
every two. Okay, so 24 pays in a year. Is that so?
Yeah.
The pay, yeah. Okay, so the payroll cycle is going to be separate from the deposit cycle. When you're on a semi-monthly pay cycle, that paid, and you are on a semi-weekly deposit cycle, then the day that you make the deposit is going to be different probably for every pay period. So let's take a look at that. Actually, that's a great question. Let's pull up the calendar here. Let me see if I can get a bigger calendar than that one. 2023 calendar. See if I can get one that's big enough to actually see. Oh, I don't want to buy one. Come on. I want. All right. Let me make this a little bit bigger so we can all see it. Okay. So for example, and like I said, that's a great question. So for example, we've got, if we are paid on the 15th and the 31st of every month. So the 15th is a Sunday. And we'll pretend that we went ahead with our usually if it's a Sunday, usually the payday would actually be moved to the Friday. But for the sake of argument, we'll just use Sunday as an example. So we're paid on the 15th and we're a semi-weekly depositor. That means that for this particular payday, the 15th, the payment is going to be due, the deposit is going to be due by the 20th. Okay. Now on the 31st, when we're paid, which is a Tuesday, that is going to be due also on a Friday, because Saturday, any payday of Saturday, Sunday, Monday, Tuesday is due the following Friday. The 31st, the payday on the 31st, the deposit's going to be due by February 3rd. So let's look at the next month. February 15th falls on a Wednesday. So if our payday is on Wednesday and we look on a semi-weekly schedule, Wednesday, Thursday, Friday means payments are due on, deposits are due the following Wednesday. That means our deposit now is going to be due on the 22nd. If we're paid on the 28th, that's a Tuesday again. So on a semi-weekly schedule, Tuesday paydays are due, the deposits are due by the following Friday. So it's going to change. Probably, I mean, it could change every single pay period, whether it's going to be due on the Friday or whether it's going to be due on the Wednesday. The payroll department has to keep track of that. And they have to know, okay, this is going to be due. You know, we made our deposit on Friday last time, but this time we've got to make it on Wednesday because it's changed. Does that make sense? So you've got two separate schedules that you've got to keep track of. And each of those schedules, the day of the week may be different. It may be changing all the time. Does that make sense?
Yeah.
Okay. Did everybody else understand that? So it's complicated. Yeah, it is complicated. So you've got two separate schedules you've got to keep track of. And this is why that attention to detail is so important in payroll. But you've got those two separate schedules that you have to keep track of and make sure that you are you're following. But they're all over the place, right? They're going to be different every single payday. So, and that's probably the most complicated scenario is if you're on semi-weekly or if it's monthly as well. Because so January 31st, if it was once a month, January 31st is a Tuesday, February 28th is a Tuesday. Well, March 31st is a Friday. That's going to have a different due day. April 30th is a Sunday, Wednesday, Friday. So it's all over the place for monthly as well. But for semi-monthly, of course, it's more frequent. You're going to have to do it. You have to keep track of it twice as often. Okay. Let's see here. Oh, I was going to look up the 941 here for you. Because on the 941, it actually tells you on down here. Let me make it a little bit bigger. Okay. So, line 12. Okay, so this is the form that we're going to be going through. We're not going to start it today. Maybe over the weekend you can take a look at it yourself and kind of familiarize yourself with it. If you look under here under part 2, it gives you an idea of, it tells you what the deposit schedule is for your business. So line 12 on this form. So line 12 is basically the total tax, the total amount of tax that was due for the quarter. So if the total tax due for the quarter, not for the payroll, for the quarter, is less than $2,500, or on the last 941, it was less than $2,500, and you did not have a next day deposit obligation during the quarter at all. So you didn't incur that next day, that $100,000 next day. Then you are a monthly schedule depositor. So if you owe less than $2,500 per quarter, then you are on a monthly deposit. I'm sorry, you're on a quarterly, I did that wrong. You're on a quarterly deposit schedule. So less than, and let me write that down here. I might take a picture of this and post it for you guys too. So less than, let me pull that up. Oh, come on. Shoot, where did it go? There it is. So less than 2,500 per quarter. Now, remember, that is that less than 2,500 per quarter is, that's better, has to do with the amount, not the payroll, but the amount of taxes that have been withheld and the amount that is owed by the, sorry, something popped up there, by the business. So that $2,500 is the amount of payroll taxes, income taxes withheld, Social Security, Medicare taxes. If it's less than $2,500 a quarter, then you can deposit it on a quarterly basis along with the Form 941, and it's going to have this same schedule. If it's between $2,500 and I think it's 50,000. Let me see here. Hold on just a second. Yes. So usually it's between 2,500 and 50,000 of liability for the quarter. You're going to be a monthly scheduled depositor. Semi-weekly is generally speaking between $50,000 and $100,000. And then next day is any amount over $100,000. Now, the IRS will tell businesses, the IRS figures this out for you. Like I said, everybody starts as a monthly depositor. Okay, let me pull that back up again, sorry. Everybody starts as a monthly depositor. When you start a new business, you're automatically a monthly depositor. And then what the IRS does, because you don't have any, they don't know what your deposits are going to be. They don't know how much payroll you're going to have. What the IRS does is they've got this look back period. And the look back period runs from July of the previous year to June of the current year. And then they tell the business in November what their schedule is going to be. So for example, last November, employers would have received notices from the IRS of what their schedule was for depositing. And the IRS would have looked at July, so this is November 2022. They would have looked at from July 2021 through June 2022, and then sent out the notices in November of 2022 to tell employers what their deposit schedule is. So if in the look back period, their total liability was between 2,500 and 50,000, then they're going to be a monthly depositor. If in the look back period, their total liability was between 50,000 and 100,000, then they're going to be a semi-weekly depositor. They're never going to be permanently a next day depositor. Again, that happens on a pay period per pay period basis, only for each pay period. But everybody starts out as a monthly depositor. And then once they have that history that the IRS can look back at, then the IRS will tell them what schedule they're on. And again, this only pertains to the deposits, not the reporting, not the 941 reporting. Everybody's got the same 941 reporting deadlines, but the deposit deadlines vary. So again, start out as monthly. Once you've got that look back, that history to determine how much has been paid, then the IRS is going to look back at that period and tell businesses by November what their pay schedule is for the next year. So November notices for the schedule starting in January. So those businesses would have received notices in November 2022, and now once January starts, they're on whatever schedule the IRS told them that they needed to be on. Okay, questions? No, I'm about out of time. It's complicated. The deposit schedule is complicated, but you can see the premise behind it. The more you owe the IRS, the faster they want their money, right? Let's see here. So again, take a look at the 941. You've got homework that will involve putting together a 941. So let's see here. This basically said the same thing. Some other specifics about household or domestic employees. They have some different rules. So how are the amounts deposited? They are done electronically. Employers are, it used to be in the olden days, you would actually go to the bank and make a deposit. The bank would process it all for you. Now it's done electronically, and it has to be done electronically unless you're a quarterly depositor. Then you can write a check and send it in with a 941. Otherwise, everybody has to deposit it electronically, and it's done through this system called the EFTPS system, electronic funds transfer portal. I think that's what that stands for, something along those lines. Okay. Again, I guess you can still do it through the bank. Most companies are going to do it through the EFTPS system. Questions about the schedule? Okay, I suggest you review that because, like I said, it's your head hurts. I know it's the deposit schedule. The reporting schedule, that's easy, right? Deposit schedule is a little bit more complicated, and it's mostly that semi-weekly one and figuring out which one is the correct one to use. Like I said, that the IRS tells businesses which one they're using. Yeah, go ahead, Lisa.
Okay, I do have a question. Something that you mentioned. It's not about the 491 or the deposit schedule or anything like that, but for people that get paid once a month, do you work the whole month of January to get paid at the end of February?
Could be.
Oh my. Okay.
Yeah. Usually they won't, usually they won't wait until the end of, like, as far as paychecks go, they won't wait that long because the paycheck schedule is different. So, but for example, when I was working as a CPA, I got paid monthly. But at the end of the month was the end of the pay period, but our payroll department processed it really quickly. And so I think it was by like within a week, we got our paycheck. So it was very quick. So a lot of them, they don't take that long, but some of them do. They don't, as long as it's made clear. I think they do have to pay within a certain period of time, but I mean, that's possible.
Okay, thanks.
Yeah, but I mean, that wouldn't be very common that it took them that long to actually pay employees, because remember, these schedules that we're talking about today have to do with paying the taxes that have been withheld. They don't pertain to the actual paycheck, like the paycheck schedule. That's a separate thing. Other questions? No? Okay. Well, we'll leave it off there. We will pick up here in preparing the 941s when we get back together on Tuesday, and we'll go through some problems, I think, with with doing that as well. There are a couple, some of it's pretty self-explanatory and easy to understand. Some of it, there's some nuances to filling out those forms. So, all right, let me know if you have any questions. Have a great weekend. All right, we'll see you next Tuesday. Hopefully the weather, I think it's supposed to be warmer next week, 40s. It's, I don't know about you, it's like, it's snowing up here again. Ugh. All right, see ya.